Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning, it's Wednesday, November 12th, and this is your London Open Brief. Two things stand out. The yen is sliding again as Tokyo signals caution on tightening, and Europe is set for a firmer start, even as tech enthusiasm cools after a sharp move in AI names in Asia. Meanwhile, the U.S. government funding saga appears to be easing, and that's shaping the dollar tone across currencies. Let's start in Japan. The yen weakened to fresh multi-month lows after Prime Minister Sanai Takaichi said Japan cannot yet declare an exit from deflation, an urged policy that supports wage-led inflation. The finance minister added he's seeing one-sided, rapid currency moves and will watch markets with a high sense of urgency. For traders, that's a reminder of two-way risks, but the bigger signal is policy patience, which has pushed euro-yen to its strongest levels since the early 1990s and kept yen crosses supported. Across equities, Asia traded mostly higher, following a mixed Wall Street, with a notable pullback in artificial intelligence stocks after SoftBank reportedly sold its entire stake in a major U.S. chipmaker. In Europe, futures point to a broadly higher open, extending this week's positive momentum. The backdrop is helped by hopes the U.S. government shutdown threat is fading, which steadies risk appetite, though selective given tech's wobble. In currencies, the Australian dollar is on the back foot against the U.S. dollar for a second session, with the greenback drawing some support from progress toward reopening the U.S. government. Cross-currents are visible elsewhere. The dollar is treading carefully against the Swiss franc amid growing talk of additional Federal Reserve rate cuts later this year. In the Antipodes, the Aussie-Kiwi cross is holding near multi-year highs after cautious remarks from the Reserve Bank of Australia's Deputy Governor. And the Aussie yen remains underpinned as the Bank of Japan sticks to a gradual approach. Commodities are feeling the dollar mix. Silver has slipped after a strong run, with renewed U.S. dollar demand prompting some profit-taking. Crypto markets are softer too, with short-term technical views flagging ongoing downtrends in Bitcoin, Ether, and Ripple. In Europe's policy lane, the debate over packaging rules continues, with industry arguing that restricting recyclable PET food trays could raise waste and costs, while Brussels also advances a new defense industrial push. Political frictions are bubbling as well, but for markets, this remains background noise to the growth and rates story. Turning to the market and sector focus. Yen weakness supports Japanese exporters and keeps carry trades buoyant, while a steadier dollar tone pressures high-beta currencies like the Aussie and Kiwi. A softer silver price hints at a mild risk-off tilt in precious metals, consistent with a firmer dollar on the day. But Fed dovish chatter is limiting swings in haven pairs. Looking ahead, the calendar is relatively quiet in Europe. India's consumer inflation reading is due later today and could move the rupee. And investors will stay tuned to developments around U.S. government funding and any fresh guidance from central bank officials. What I'll be watching today: dollar-yen for signs the uptrend persists, or if verbal pushback from Tokyo slows the pace. Euro-yen near multi-decade highs, which is a barometer of global risk appetite. The Aussie against the U.S. dollar, where the near-term bias leans lower on policy divergence. Silver against the dollar, to see if the pullback deepens. And dollar-rupee around India's inflation print for a potential upside bias. The takeaway? Risk sentiment has a mild tailwind at the open, but it's an uneven tape, with yen weakness and policy signaling in Japan doing as much to shape the day as hopes of a smoother path for U.S. funding. For now, cautious optimism with cross-currents. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.